Hey, Moby Trades! I wanted to do a video analysis update of the stock market. We'll talk about the major indices like the Nasdaq, the S&P 500, and the Dow Jones. We'll talk about Apple, Nvidia, Facebook, Advanced Market Devices, Qualcomm, and Intel. We'll talk about Taiwan Semiconductors, ICLN, the Clean Energy ETF, Tesla, First Solar, and Enphase Energy. We'll talk about Berkshire Hathaway, Disney, XLF, XLI, and XLE, the oil sector, the industrial sector, and the financial sector ETFs. We'll talk about JETS, the airline ETF, Boeing, Exxon Mobil, Amazon, Procter & Gamble, Walmart, Bitcoin, Ethereum, Pfizer, gold, and much more. So here is Apple. We have a 1, 2, 3, 4, 5 large degree wave 1 from this quad witching low that we form in September, a very important quad witching date. Those are the quarterly rebalancing dates. You always expect some action in the market around those dates. They're the third week of September, the third week of December, the third week of March, and the third week of June. Okay, always have those on your calendar. They're going to be very exciting. This is a wave 1 and a wave 2. We have another wave 1 and another wave 2 that ends at exactly the 61.8% retracement. So we said before it happened, the length of wave 1, place of the wave 2 low, gave a minimum wave 3 target, but a textbook wave 3 target was the 161.8% extension of wave 1, which was 149. Before we even reached 149, I said that we would expect a shallow wave 4 correction between the 23.6 and 38.2% retracement before a wave 5 higher. So all of that happened. Apple went and kissed the 161.8% extension of wave 1, then it had a shallow wave 4 between the 23.6 and the 38.2% retracement. So for a wave 4, generally, the 50% retracement of wave 3 and the wave 1 high are the invalidation levels. That's around 136 to 137. I think we see Apple's kind of turning up right now. So if bulls wanted to, they could move that stop up to 141 and say if that holds, wave 4 is in, the length of wave 1, place at the wave 4 low, takes Apple in the next 5 to 7 weeks with Nvidia to around 162. If we look at Nvidia right now, it's almost identical to what we see with Apple. We can see that this is a wave 1 and a wave 2. We have a wave 3 impulse that blows past the 161.8% extension of wave 1, and it makes a new high on the relative strength index. Then it has an ABC correction that ends at exactly the 38.2% retracement. So the length of wave 1, regardless of how you count Nvidia, placed at the wave 4 low, will take Nvidia between 218 to 224 for the wave 5 target, and that should happen in the next 5 to 7 weeks with Apple. So if Nvidia is above 178, wave 4 was put in at the 38.2% retracement. The length of wave 1 placed at the wave 4 low takes Nvidia to 218 to 224. I think with Apple, that happens in the next 5 to 7 weeks. If we look at Facebook, it's another one. It's a very similar idea. Actually, before we talk about Facebook, I want to talk about the Nasdaq because it's pretty similar, almost identical to Apple and to Nvidia. I'll explain why I have two lines, this orange line and this black line, in a second. But first, I believe that the Nasdaq has a wave 1 and a wave 2. It has a large wave 3 impulse, and then a wave 4 correction ends at the 23.6% retracement. So the Nasdaq, just like Apple, just like Nvidia, if it holds above 352, then bulls can say wave 4 is in right now. The length of wave 1, regardless of how you count the Nasdaq, will either take it on a wave 5 to 387 or a wave 5 to 397 in the next 5 to 7 weeks. So the wave 5 target zone is 387 to 397, so long as the wave 4 low of 352 is not broken. So why do I have an orange line and a black line? Well, in wave 3, wave 1 is the measuring stick for wave 5. So depending on how you count the Nasdaq and Nvidia will affect the wave 5 target. So one way that a trader could have counted Nvidia and they could have counted the Nasdaq is that this is a 1-2-1-2 Elliott wave nest. So they're saying that this is a 1-2 and this is another 1-2. So we're within waves 3, 4, and 5 right now. It's the same idea, but in this case, the length of wave 1 is smaller. So that's why I have an orange line to say the length of wave 1 placed at the wave 4 low gives one wave 5 target. What I'll say is the minimum wave 5 target of 387, and then a larger wave 1 target is the length of this whole rally placed at this low, which could take the Nasdaq to around 397. So this is my preferred count of the Nasdaq, is actually that this all is one move. This large wave 1 in black is wave 1, that's wave 2, and then on the same degree, we've completed wave 3 and wave 4. So this is wave 3, that's wave 4. The length of wave 1 placed at the wave 4 low will take the Nasdaq to 387 to 397 in the next 5 to 7 weeks, provided that this low of 352 is not broken. So that's the Nasdaq, that's Nvidia, and that's Apple. They're giving a very similar, idea of the market, and Facebook, is agreeing with that too, that this is a wave 1 and an ABC correction put in wave 2. Then we have another wave 1 and another wave 2. This is wave 3 and this is wave 4. So this is a large wave 3 impulse. Remember, we were using the fact that Facebook was breaking to a new high on the relative strength index with price as evidence that this wasn't the top, back when it occurred. And that was very useful. It was very accurate too. So I believe this is wave 1 and wave 2. This is wave 3. And then wave 4 ended at the 38.2% retracement. So if Facebook is above 347 with the 50% retracement of 337 acting as the invalidation level, I expect it will go on a wave 5 higher. I believe this wave 5 will be the length of wave 1 placed at the wave 4 low. We'll see Facebook in the next 2 months, 3 months, pretty conservatively go on up to 424 to 425. So Facebook, Nvidia, Apple, the Nasdaq, very similar idea of a wave 5 going on. So here's advanced market devices. Ignore these smaller numbers for now. The larger degree count is the more important count. We'll zoom in on the smaller degree in a second. But if we look at advanced market devices, this is an elephant in the room if you're a bear in the stock market. So remember the debate that we were having, just a couple of months ago. Was advanced market devices being accumulated this entire time, or was it being distributed this entire time? Well, the wave theory and the options market, we're seeing a lot of evidence that this was accumulation. This was a wave 1 and a wave 2. This was a wave 3, and then wave 4 ended at the 38.2% retracement. So we said the length of wave 1 placed at the wave 4 low would give a extremely conservative wave 5 target of 115. That's already been reached. We said the more accurate target would be the length of wave 3 placed at the wave 4 low, and that would take advanced market devices all the way to around 136. So, advanced market devices has come within $14 of reaching the length of wave 3 placed at the wave 4 high. I used to say that AMD reaching 136 by the end of the year was aggressive, and within the first quarter of 2022 was conservative. Okay, so what's going on with advanced market devices? Well, it was all over the bar chart, straddle and strangle screener, with Apple during this range. And then, implied volatility hits 0%. And then what happens? That magical quad witching date comes around. And then all of a sudden, explosion time for advanced market devices is the exact same thing they did last year. They had advanced market devices consolidating, boring people to death. And then what happens? That quad witching date comes around and everyone's got their calendar marks to take profits on their large, AMD holdings that they were accumulating this entire time. So the large institutions, they are trading quarter to quarter. Okay, the June quad witching date explosion, the June quad witching date explosion. That's not an accident. Okay, so the length of wave 3 placed at the wave 4 low, that takes AMD to 136. If we zoom in on the smaller degree, we get a even nicer picture of AMD. I think there's a couple of ways to count AMD. The more aggressive way to count AMD says that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So I think it's important to note, AMD, it makes a brand new high on the relative strength index. Very unlikely that this is a wave 5 that has ended. By the rules of Elliott wave theory, I can't count this as a wave 5 that has ended. I believe this is a wave 1 and a wave 2, and this is either another wave 1 or another wave 2, or it's a wave 3 and a wave 4. So if this is another wave 1 and another wave 2, then AMD is nesting right now. It's going to go explode beyond that, 136 target in the larger degree. I think a more conservative count is that that's a wave 1 and a wave 2. And this is a wave 3 and a wave 4 on the same degree. And we're still, either way, expecting AMD, at least in the very short term, will make at least one more high. So AMD is looking very good. It's formed a clear 5 waves impulse from this low. You don't even need to count it to know that, because AMD just exploded above the wave 3 high. AMD has confirmed that, yeah, that was all consolidation. This was all basing. And what's great about AMD is that this is the same chart we're seeing across the semiconductor sector, across the growth sector, down to the date that May 10th, May 11th, May 12th low will result in a 1, 2, 3, 4, 5 waves impulse. And that, that's a very important beginning to a new bullish cycle, not just for advanced market devices, but for a lot of stocks, especially in the semiconductor sector. AMD is going to 136. That's looking conservative. Qualcomm is going to follow advanced market devices, in my opinion. Qualcomm has another wave 1 and an ABC correction put in a wave 2. Then we had a large wave 3 impulse and an ABC correction put in wave 4. So just like the length of wave 1 placed at the wave 4 low, sounded a little crazy for Qualcomm. I think it's actually going to be the length of wave 3 placed at the wave 4 low. And then down to the date, March to January, this rally will get replicated. The length of wave 3 placed at the wave 4 low will take Qualcomm to 232. So we had wave 4 end at the 38.2% retracement. The length of wave 3, in my opinion, placed at the wave 4 low will take Qualcomm to around 232. The ideal time target for that is that this gets seen in the first quarter of 2022. We're going to see a lot of action, and with that quad witching day approaching in September, I think that some of these semiconductor stocks like Taiwan Semiconductors and Intel will be huge beneficiaries, and I think the clean energy sector will be huge beneficiaries of this September quad witching day. We're going to see a massive rotation, and we're going to wake up in the fourth quarter on a daily, weekly basis. We'll be seeing some pretty nice outperformance from the clean energy stocks, and that's a sector that a lot of retail hates right now. This is wave 1 and wave 2, large wave 3 impulse. Wave 4 ends at the 38.2% retracement, and large institutions, they're loading up options on Qualcomm when they're at their absolute cheapest. So the institutions, they know, or I should say the options market knows, that retail hates Qualcomm, and they know that retail hates clean energy, and you know that because the implied volatility ranking percentile is at the very bottom of its 1-year range. So this is the cheapest that options have been on Qualcomm, is the cheapest options have been on Tesla, and a lot of these semiconductor and clean energy stocks for a while. So looking very good for Qualcomm that we're going to go on this wave 5 higher. My target is 232. If we look at Taiwan Semiconductors and Intel, very similar idea in the semiconductor sector. This is wave 1, this is wave 2, large wave 3 impulse, and then we have an ABC correction we put in wave 4. So the invalidation level for this wave 4 is going to be the 38.2% retracement of wave 3. If that holds, the length of wave 3 placed at the wave 4 low will take Taiwan Semiconductors to 208. I almost mixed it up with Qualcomm because they're the exact same charts. This is a rally from March to February, and Qualcomm is from March to January. But the length of wave 3 placed at the wave 4 low will take Taiwan Semiconductors to 208. I think 208 could get seen in the first quarter of 2022, and I think in the short term we want to see this 38.2% retracement of 104 hold, and then we're going to see pretty soon that Taiwan Semiconductors will follow AMD, it will follow Nvidia, it will break above this high with Qualcomm and confirm, yes, this is all institutional accumulation in not only the stock market, but also the options market. And Taiwan Semiconductors is getting ready for an explosive wave 5 that I believe will be the length of wave 3 placed at the wave 4 low and reach 208. So Taiwan Semiconductors, Qualcomm, and Intel, they're sending a very similar message. The semiconductors are getting ready to follow advanced micro devices, just like advanced micro devices was getting ready to follow Nvidia. So here's Intel, clear as day, a 1, 2, 3, 4, 5 waves impulse. This is clearly a 5 waves rally. That means that this is most likely is a 3 waves ABC correction that ended at the 61.8% retracement of wave 1. So the length of wave 1 placed at the wave 2 low should take Intel in the next 4, 5, 6 months to 77, provided that the 78.6% retracement is not broken. So clearly 1, 2, 3, 4, 5 waves. Now an ABC correction looks like it's ending. This wave C looks like it's ending with momentum divergence. The length of wave 1 placed at the wave 2 low should take Intel to 77. I think that happens around 4 or 5 months from now. But Intel's looking really good. I think that we're going to see this stock go from very, very boring to very, very exciting. It's on the bar chart straddle and strangle screener right now. They've been accumulating options on Intel for a little bit, and we're going to see it break above this high, and it's going to form this nice, beautiful round base. So Intel is looking really good. If we look at some of these clean energy stocks, they're sending a very similar message to the semiconductors, and I think that's interesting because I don't read the financial news media, but I noticed that they were correlating the semiconductor stocks and the clean energy stocks together, saying that they were, having similar fundamental news stories because of the semiconductor shortage. So obviously, as a technical trader, I don't really care about that, but it did make me, look at the charts and realize, hey, a lot of these semiconductor charts and a lot of the clean energy charts, they look very similar. That for ICLN, the clean energy ETF, this is a rally from 316 to January. Very similar to those dates we just talked about for the semiconductor stocks. I think the full count for ICLN is that this is a wave 1 and a wave 2. The more conservative view says that this huge rally is a wave 3, and we're putting in wave 4 right now at the 50% retracement, which is around 21. So I think the length of wave 3 placed at the wave 4 low will take ICLN to 46 in the next 8 to 10 months, provided the 61.8% retracement of 18 is not broken. So if ICLN, the clean energy ETF, is above 18, the length of wave 3 placed at the wave 4 low will take ICLN to 46. And I think 46 gets hit, within the, first and second quarters of 2022. And if we look right now, we can see on the price overview for ICLN, this ETF full of clean energy stocks, 0% 38% implied volatility ranking percentile. The options market knows retail traders hate this sector. And I think with that quad witching date approaching in September, the stage is set right now for a massive rotation into the clean energy sector, into a lot of semiconductor stocks too. And we're going to wake up in the fourth quarter and we're going to see some crazy headlines from a lot of these semiconductor stocks, a lot of these clean energy stocks. ICLN, undoubtedly will be a big beneficiary of that. I think the length of wave 3 places the wave 4 low, gives a minimum target of 46. But what could it be? Well, since we're at the 50% retracement, this could be a wave 1 and a wave 2. So when we get to 46, that won't be the top. That'll be the minimum wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. I wanted to zoom in on ICLN for a little bit. To the shorter term view, I got this trend line from finviz.com, FINVIZ. So my rule is if Finviz saw the trend line, then it's real. If Finviz didn't see the trend line, you're probably, pulling it out of somewhere. But, ICLN, this is an ABC correction. Now we're breaking this downtrend line. A lot of wave theorists, they'll use these downtrend lines if they're not being biased as, a way to say, hey, that is the end of the ABC correction. We've begun the new bullish cycle higher. When we look at First Solar, when we look at Enphase Energy, they're really going to support that idea because they form 1, 2, 3, 4, 5 waves from this exact same, May 11th low. We're also seeing another ABC correction likely ending with momentum divergence. So I'm keeping a lot of data on ABC corrections that end with momentum divergence, how successful they are. Another one we can do, let's just turn on the handy dandy Ichimoku cloud and look. Nice little cloud breakout for ICLN. This could be the start of a huge monster rally. The options market certainly says ICLN has the juice. And the components of ICLN, they really look like they got the juice, especially Tesla. I don't know if Tesla's in ICLN, but this is a wave 1 and wave 2, a huge wave 3 impulse, and an ABC correction ends wave 4 at the 38.2% retracement. Then I believe we have another wave 1 and another wave 2, so the length of wave 3 placed at this wave 4 low will take Tesla to 1,368. I believe that's going to get hit within the first quarter of 2022. It could get hit by the end of the year. Tesla's going to start expanding. What's that mean? Tesla's going to go from not moving a lot, right? Tesla's going to go from being very, very boring, low implied volatility to very, very exciting. A lot of movement from Tesla. It's up to us as wave theorists to figure out, will that move be to the upside or to the downside? But there's no doubt that Tesla's going to have a monster move. I think we already know that move is going to be to the upside until 546 is broken. That's my base scenario. Tesla's completed wave 4 and it's within a wave 5 right now. Tesla's all over the bar chart straddle and strangle screener. It's with PayPal, it's with Amazon, it's with Apple, but Tesla's been hogging this for weeks. Notice how Boeing's on this right now. Boeing has 0% implied volatility ranking percentile 2. So does Intel. What does that mean? Does that mean that this is a magic screener and that all these stocks are going to explode to the upside? No, but it does mean all these stocks have extremely cheap options and they're being accumulated right now. So institutions are betting on a large move. It's up to us to figure out, will that move be to the upside or the downside? If we look at Tesla, they're rapidly accumulating options on Tesla when implied volatility ranking percentile is extremely cheap. So, if we look at Tesla right now, I think I can see why. I'm pretty sure this is a wave 1 and wave 2. So if Tesla is above 546, then yes, wave 2 is in. If it's above 539, then wave 4 is in. And Tesla's within a monster wave 5 right now. This is wave 1 of wave 5 and wave 2 of wave 5. Wave 3 of wave 5 takes Tesla to 929. Why is that a big deal? Well, because that will confirm, just like advanced market devices, that this is all accumulation. This is all institutional basing, not only in the stock market, but in the options market. And it's going to be just like AMD, where all of a sudden the length of this rally placed at this low, it doesn't look so outlandish anymore. But anyway, Tesla's going to break above 909. All your classical trading friends, they're going to tell you to buy it because it's going to be forming a large cup and handle. I think this has got, a lot of exciting days coming up. The length of wave 3, place of the wave 4 low, that's going to take Tesla to 1,368. That could happen by the end of the year. I think that's going to happen by the end of the first quarter of 2022, pretty conservatively. So I'm excited about Tesla. I'm excited about First Solar and Enphase Energy for what they mean on the larger degree for the clean energy sector. So this is wave 1 and wave 2 for First Solar. I believe this is another wave 1 and another wave 2. So I really want to focus on the smaller degree picture for First Solar first. If we zoom into FSLR, what most likely is happening is it's just like AMD. That's a wave 1 from the early May low, and that's a wave 2. But what's important about First Solar? The important thing about First Solar right now is the same reason that Enphase Energy and Advanced Market Devices, and a lot of these stocks that are forming 5 waves impulses from the May low are very important. They're confirming that this is a new bullish cycle that's begun. Elliott waves are fractal in nature. Okay, if this is a 1, 2, 3, 4, 5 waves impulse, which it is, then that's going to become a subdivision of a larger degree wave. So I think one way to count First Solar right now is that this is 1, 2, 3, 4, 5 waves. The length of wave 3 placed at the wave 4 low will take First Solar on a wave 5 higher to around 100. Now, what happens if First Solar blows past 100? Well, that means that this probably isn't a 1, 2, 3, 4, 5 waves. This most likely is just like Advanced Market Devices. That's all wave 1. This is wave 2, and the length of wave 1 placed at the wave 2 low will take First Solar into la la land. It's going into the 120s. It's even heading into the 160s. We can delete these numbers right now and kind of see what this might look like. But the important thing about First Solar, the important thing about Enphase Energy is they are forming 1, 2, 3, 4, and now a 5th wave confirmed from this low. So that means a new bullish cycle has begun, really regardless of how you count First Solar, and it really supports the idea, just like Advanced Market Devices, that May 11th low is extremely important if you're looking at a chart of a growth stock or you're looking at a chart of even honestly a semiconductor stock, especially in the clean energy sector. We've begun a new bullish cycle. So First Solar, it's really supporting the case that when we look at ICLN, extremely low implied volatility, that large move is going to resolve to the upside. So Enphase Energy, same idea. If we look on the smaller degree, what it most likely is, in my opinion, that's wave 1, that's wave 2. We're within wave 3 right now. Does that really even matter? No, that doesn't really matter. What I think is most important about Enphase Energy is the same thing as First Solar. We formed 5 waves from this May low. Why does that matter? Why do we care? Because that means most likely that this is a new bullish cycle that's begun. It means just like Advanced Market Devices, that May 11th low is going to hold for a very long time until we see some explosive moves to the upside for First Solar and for Enphase Energy. So I think one way to count Enphase Energy and First Solar is pretty similar, that this is a wave 1, 2, 3, 4, 5 waves. And Enphase Energy has formed 5 waves from this low. Okay, I think what's probably more likely is that this is all wave 1 and this is wave 2, and Enphase Energy is getting ready to blast off. But the important thing about Enphase Energy, the important thing about First Solar, we formed 5 waves. That May 11th low is going to hold. We've begun a new bullish cycle. It's going to be very exciting when we see Enphase Energy and First Solar above these February 10th highs. Okay, so Enphase Energy, First Solar, they formed 5 waves from the May low. They really support the idea the clean energy sector is ready to take off. And when we look at the fact that the ICLN ETF has extremely cheap implied volatility, we see Tesla has been living on the bar chart straddle and strangle screener. It's really supporting the idea a monster move is coming. It's going to be to the upside. And with that September quad witching date around the corner, be on the lookout for some massive rotation into the clean energy sector. So that's ICLN. Here is the S&P 500. We should probably be looking at the Dow Jones ETF DIA first. There's a couple of ways to count the S&P 500. Let's start with the biggest picture degree first. The biggest picture degree of the S&P 500 is that this is a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction, large degree wave 2. So since the election, we have known that the length of wave 1 placed at the wave 2 low gave a minimum target of 460. A very basic, very simple wave theory principle would have prevented you from being super bearish and shorting the market the entire, this entire rally. You know what else would have? The Ichimoku cloud. Okay, so if you're a bear, you're looking to short, the Ichimoku cloud might be your best friend because it would have kept you out of a lot of this crap for a while. But anyway, I'm not here to troll, but that's the Ichimoku cloud. Sometimes indicators can be useful, and I think for some of these bears, turn on the Ichimoku cloud, and you probably shouldn't be shorting if we're above the cloud. But anyway, 1, 2, 3, 4, 5, large degree wave 1, and an ABC correction put in a large degree wave 2. The length of wave 1 placed at the wave 2 low. Take SPY to 460, and we're getting close to that. So let's examine this wave count kind of in the shorter term view. I think there's 2 ways to count the S&P 500 SPY. Okay, what I want to say first, this is the most aggressive way to count SPY. Okay, this is the most aggressive way to count SPY, and this is a wave 1 and that's a wave 2. This is another wave 3 impulse that is subdivided into 1, 2, 3, 4, 5 waves. So this is wave 1, this is wave 2. We end wave 3. In the middle of July, we have a wave 4 correction, and we're within wave 5 higher right now. under this scenario, we don't want to see 421 broken. So there's no scenario where SPY bulls don't want to see 421 broken, okay? This is the more aggressive view that we put in wave 4 at 421. The length of wave 1, place of the wave 4 low, gives a wave 5 target of 488. While I think this is perfectly valid, this is not my preferred count of the S&P 500. My preferred count of the S&P 500 is that this is where wave 3 ends on May 10th, and then we've put in wave 4 right here at this low. This is my preferred view of the S&P 500, not because it's more accurate, but because it's more conservative and because it lines up with the Dow Jones ETF DIA. So when we look at the Dow Jones ETF DIA, which we're about to do, you will see that its wave 3 ended on May 10th. That's why I want to count the S&P 500 as ending a wave 3 on May 10th as well. In this case, which is more conservative, the length of wave 1 placed at the wave 4 low will take the S&P 500 to around 470. What's most important about the S&P 500 is that there's really no way to count it where first we don't want to see this low of 421 broken. Okay, there's no view of this of SPY where we don't want to see SPY, below 421. Okay. Under this view, I think it looks something like this. This is wave 1, this is wave 2, this is wave 3, this is wave 4. So we're within wave 5 right now. This is wave 1 of wave 5, this is wave 2 of wave 5. We're within wave 3 of wave 5 right now, which when we look at the Dow Jones ETF DIA we're about to do, lines up perfectly with the Dow Jones ETF DIA count. That we're within wave 3 of a larger degree, wave 5 from the low that we formed back in October and September. Okay, so the important thing about SPY, no matter how you count it, the length of wave 1 placed at the wave 4 low will take SPY to our destination. We will have finally reached the length of wave 1 placed at the wave 2 low, that minimum, that conservative equal legs target of 460. And then, whoever needs to help, pray for the traders who are staring at the S&P 500 all day. Because once you get past the length of wave 1, place of the wave 2 low, SPY's not going to be much use to you. I'll be completely honest. If you're not trading the market as a whole, if you're just staring at the S&P 500, once SPY's past 460, it's worthless to you. Okay, we've reached that minimum target. You're going to have to be looking at the rest of the market. And if you look at the Dow Jones ETF DIA, this is going to be an extremely important chart. And it's almost identical to the S&P 500. So let's look at the largest degree of DIA. It's a 1, 2, 3, 4, 5, large degree wave 1, and an A, B, C correction ends wave 2. Now notice how the Dow Jones ETF DIA, right? These equal lines, they're too silly. Well, the length of wave A, place of the wave B high, is exactly where wave C ended, okay? That's not an accident. That's institutional computer algorithms being programmed to take profits at the 1-to-1 ratio. So the 100% ratio is really important. It's also called the equal legs ratio. The length of wave 1 placed at the wave 2 low gave a conservative wave 3 target for the Dow Jones ETF DIA of 372. So 372 is the destination, and I like DIA because the count is just so clean. From this low that we form on October 30th, we have a wave 1 and we have a wave 2. We have a large wave 3 impulse and we have an ABC correction in wave 4 at 332. Now we've broken above the wave 3 high. We have confirmed on the Dow Jones ETF DIA that wave 4 has ended and we're within a wave 5 right now. I believe this is wave 1 of wave 5 and this is wave 2 of wave 5. So wave 3 of wave 5 should end around 361. We'll have a tiny wave 4 correction and go on a wave 5 higher. The length of wave 1 placed at the wave 4 low will take DIA to 372. And it's almost too perfect. It's almost too clean that this textbook 1, 2, 3, 4, 5 waves target of 372 lines up exactly with the length of wave 1 placed at the wave 2 low. So my primary expectation for the entire stock market right now is that if the Dow Jones ETF DIA is above 337, it will go to 372. I think that will pretty conservatively happen in the next 2 months. I honestly think it's going to happen by the end of the quarter. If we look at Apple, if we look at Nvidia, if we look at a lot of these tech components, they're sending the idea that we're going to run up into the end of the quarter. Now, what happens if this happens earlier than that? What happens if we wake up on the last day of August and the Dow Jones ETF DIA is at 372? Well, then we better be on the lookout for some quad-witching shenanigans, because there's a chance that when the Dow Jones ETF DIA goes 1, 2, 3, 4, 5 waves, that it corrects not only this cycle, but this cycle from the October low. So the Dow Jones ETF DIA getting to 372 is going to be extremely important, especially if it happens before September quad witching, towards the end of September. Berkshire, Hathaway, and Berk B, these might be the most important charts in the market besides DIA. This is a wave 1. This is the wave 2. This is a huge wave 3 impulse. We make a new high on the relative strength index with price. Most likely, this is a wave 3 that ended on May 10th. We had an ABC correction. We put in wave 4 at exactly 270. Now, XLF has already broken this May 10th high. Okay, if you trade the market as a whole, then you're not going to spend all weekend asking, will Berkshire Hathaway break above, the wave 3 high? You already know B is going to break above the wave 3 high because Morgan Stanley's already done it, and because the financial sector ETF, XLF, has already broken above this exact same high. This is wave 1 and wave 2. This is wave 3, and an ABC correction ended wave 4. The length of wave 1 placed at the wave 4 low takes Berk B to 310. This is extremely important for general market bulls. When Berk B gets to 310, that's 1, 2, 3, 4, 5 waves. And we're going to look for Berkshire Hathaway to correct this cycle in some way or another. Whether or not that's a wave 4 correction or a wave 2 correction remains to be seen. But right now, it's pretty clear. Wave 1, wave 2, wave 3, wave 4. Once we reach 310, we need to be on the lookout for Berkshire Hathaway ending a wave 5. Okay, so Berkshire Hathaway getting to 310. The Dow Jones ETF DIA getting to 372, and Disney, these are kind of Disney getting to 216. Those are kind of the levels where bulls want to be sounding the alarm. So Disney, wave 1, wave 2, wave 3, and an ABC correction puts in a wave 4 low. The length of wave 1 placed at the wave 4 low gives a minimum target for Disney of 216. Now, what happens when Disney gets to 216? Well, that's going to be a good thing, and it's also going to be a bad thing. It's going to be a good thing because that's 1, 2, 3, 4, 5 waves. The length of wave 1 placed at the wave 4 low gave a minimum wave 5 target of 216, and that's going to complete, in my opinion, a larger degree wave 1. Why might that be a bad thing? Well, when Disney gets to 216, we're going to look for it to correct this cycle for a generational buying opportunity. So Disney reaching 216, Berkshire Hathaway reaching 310, the Dow Jones ETF DIA reaching 372. Those numbers are much more important than any number on the S&P 500. Okay, so here's Disney. Once we finish this wave 5 higher, that's going to complete wave 5. And that's also going to complete a larger degree wave 1. Bulls will be very eagerly looking to buy a wave 2 correction before a waves 3, 4, and 5 higher. This is going to be a generational buying opportunity if you're prepared for it. It's going to be pretty scary if you're not. But Disney reaching 216. Berkshire Hathaway reaching 310, the Dow Jones ETF DIA reaching 372. Those are the most important numbers for me as a trader. So that's Disney. Here's XLF. All right, you have to trade the market as a whole. If you're asking right now, you're going to spend all weekend, will Berkshire Hathaway break above this high? All right, this is a wave 1, that's a wave 2. This is a wave 3, and an ABC correction has ended wave 4. So here's another wave 4, another ABC correction that ends with momentum divergence. So I'm keeping track right now of ABC corrections that end with momentum divergence and seeing how successful they work as a confirmation signal that the wave 4 has ended. This is wave 1, that's wave 2, this is wave 3, and that's wave 4. Now wave 4 ends at the 38.2% retracement to the dollar. To the dollar. We end at the 38.2% retracement. Okay, you have to know wave theory. You don't have to believe in it, but you have to know it, okay, because the length of wave 1 placed at the wave 4 low, that gives a minimum target of 43. Now, this is the exact same wave 3 high. It's a little different date, but it's the same high on the chart that we're asking right now. Will Berkshire Hathaway break above this high, right? And before XLF broke above this high, Morgan Stanley had already broken above this high. So trade the market as a whole. And if you're asking a question, there's another chart probably in that exact same sector that's already answered it for you. Okay, this is wave 1, that's wave 2, that's wave 3, that's wave 4. The length of wave 1, I mean, just look at this. Placed at the wave 4 low that ended at exactly the 38.2% retracement. Takes XLF to 43. I think that XLF will reach 43. And when we talk about XLI, XLE, those targets for time are going to be 2 to 3 months. I actually think they're going to be a lot shorter than that, to be honest. But, in the next 2 or 3 months, I think XLF will reach 43, provided it holds above 34. So XLF looking very pretty. Berkshire Hathaway looking to follow it above the wave 3 high. The XLI ETF, this is another one. You have to trade the market as a whole, right? You might spend all weekend asking, will the industrial ETF break above the May 10th high? Well, guess what? The Dow Jones Industrial Average has already broken the exact same May 10th high to the date. This is a wave 1 and a wave 2. A wave 3 makes a new high with price on the relative strength index. Very likely that's a wave 3. An ABC correction capped wave 4. I don't believe XLI will go below 98, but the invalidation level is the 50% retracement of 95. The length of wave 1 placed at the wave 4 low will take XLI to 114. I think that gets hit in the next 2 months, 3 months, pretty conservatively for XLI. XLE, similar idea. Very pretty chart right here. This is wave 1 and wave 2 on the larger degree. So the 161.8% extension of wave 1 is that large degree wave 3 target. Wave 3 is subdivided into 1, 2, 3, 4, 5 waves. And I believe the length of wave 1 on the smaller degree placed at the wave 4 low gives a wave 5 target in the next 2 months, 3 months max of 61, which lines up almost perfectly with the 161.8% extension. So this large degree wave 3 is subdivided into 5 smaller waves. This is wave 1 of wave 3, wave 2 of wave 3, wave 3 of wave 3, and wave 4 of wave 3. If we're above the 61.8% retracement to the 78.6% retracement of 44 to 41, I expect the length of wave 1 placed at this wave 4 low takes XLE to 61. Okay, so that's XLE. Here is JETS, the airline ETF, JETS. The airlines have been a pretty big blemish on my record for this quarter, but the quarter isn't done yet. I still think if we look at the industrial sector, if we look at the oil sector, we're seeing a ton of evidence that there's more upsides. I know I say the banks and the tanks a lot, but that just means that these value stocks, they trade together. We're seeing XLF, we're seeing Berkshire Hathaway, we're seeing, even Disney start to get a move on. I think the airline ETF, if the industrial rally and the oil rally begins, there's almost no way that the airlines wouldn't participate in that. And I actually think they would outperform during that. So JETS, the JETS ETF, wave 1, wave 2, wave 3 kisses the 161.8% extension of wave 1. Then we have an ABC correction in at exactly the 50% retracement of wave 3. So the length of wave 1 placed at the wave 4 low gives a wave 5 target of 31. The length of wave 3 placed at the wave 4 low gives a wave 5 target of 34. So I think there's about 35, 40, 45% more upside in this sector, and I think when we look at the XLE, XLI, XLF, in a lot of these energy charts, a lot of these industrial charts, we're seeing that rally happens in the next 2 or 3 months. So there's not really an invalidation level if you look at JETS. We're at the 50% retracement. We're at the wave 1 high. But if you look at Boeing, there's a very nice invalidation level. So Boeing is an extremely important chart for the airline bulls and even just general market bulls, especially value bulls. So Boeing has been all over the bar chart straddle and triangle screener for the past 4, 5, 6 days. And we can see why, right? First, we have, a ton of sideways consolidation. Okay, this is a massive base. Most likely it's a cup and handle. And if we look at Boeing on the price overview, we can see the implied volatility ranking percentile is at 0%. So Boeing has an extremely liquid options market. Okay, the implied volatility ranking percentile will not stay 0% for very long, especially when you realize that Boeing is on the bar chart straddle screener. Okay, so what's happening? Institutions are loading up options on Boeing when they're at their absolute cheapest, and retail traders are at their absolute peak of frustration with Boeing. So Boeing is going to have a large move. It's up to us as wave theorists to figure out, will that move be to the upside or to the downside? To me, it's very clear that move will be to the upside. I believe Boeing on the larger degree is a wave 1 and an ABC correction put in a wave 2 low. If you take the beginning of wave 1 with the high of wave 1 and the low of wave 2, you have a pretty beautiful Andrews pitchfork where the large degree wave 3 target is actually going to be all the way up at the median. So, I think one elephant in the room says, wait a minute, there's not really a reason Boeing won't go to 400. Okay, but I think on the smaller degree, Boeing's going to be an extremely important chart because I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. So if Boeing is above 191, then this view is valid that the length of wave 1 placed at the wave 2 low gives a minimum target of 296. It gives a textbook wave 3 target of 607. Now, if we wake up and Boeing's above 307, then that most likely means that this larger degree wave 3 target, up damn near the 400s is on the table. I think what most likely will happen when Boeing gets to 307, we're going to need to see, does it have a pullback and make a new high, or what happens? But I think there's no scenario right now in the short term where Boeing doesn't go the length of wave 1, place at the wave 2 low, and reach 296 to 307. If we look at the airlines as a whole, if we look at the XLE and XLI and XLF ETFs, that could happen in the next 2 or 3 months when the oil stocks go on a large rally higher. I think Boeing and the airlines will move with them. And right now, if Boeing's above 191, then I expect at the very minimum, it will go to about 296 to around 307. I think the options market agrees with me. So that's Boeing. Here's Exxon Mobil. It's another one, extremely low implied volatility, right? Everyone knows you hate this sector. This is a wave 1 and a wave 2. The 161.8% extension of wave 1 is 71. That's the textbook wave 3 target. Now for Exxon Mobil, this large degree wave 3, just like XLE's large degree wave 3, is very cleanly subdivided into 1, 2, 3, 4, 5 waves. I believe the length of wave 1 placed at the wave 4 low will take Exxon Mobil to 74, and I think that's going to happen in the next 2 or 3 months, to be completely frank, that this is a wave 1 placed at the wave 4 low. I think instead of 74, the target should be 71, just because that's the 161.8% extension of wave 1. But right now, if ExxonMobil is above 52 to 50, then I think that we're within a small degree wave 5 that will lead to a large degree wave 3 target of 71. So XLE, ExxonMobil, right? All of these stocks, in the value side of the market, they're looking really good. I want to talk about Amazon, Procter & Gamble, and Walmart. I'm not quite sure that Amazon moves with Procter & Gamble and Walmart, but I just wanted to kind of include it with the consumer stocks. Nothing has really changed. If we look at Amazon right now, if it's above 3,127, then this was a 1, 2, 3, 4, 5 large degree wave 1. This was an ABC correction that put in a large degree wave 2. Now, if you clone the length of wave 1 and you place it at the wave 2 low, Amazon has not yet reached the minimum equal legs target. So, that could mean a couple of things. I think what it means is that this large degree wave 3 in black is still in progress. What's that mean? Well, that means that this is a small degree wave 1 and a small degree wave 2. So Amazon is within wave 3 of a larger degree wave 3 right now. So the invalidation level for Amazon is very clear. We want to see this low of 3,127 hold. Okay, that's not too far away. So if Amazon's about to crash, bears, you should have no problem getting Amazon below 3,127. I don't think you will. I think this is wave 1 and wave 2. I think we're still within a large degree wave 3. And on the smaller degree, we're beginning wave 3 of wave 3 right now. So this is a 1, 2, 3, 4, 5 waves impulse. It takes almost exactly 2 months that we have an ABC correction. We're putting in wave 2 between the 61.8 and the 78.6% retracement. So if Amazon's above 3,127, then this is completed wave 2. And this likely is a completed wave 2. We're beginning wave 3 of wave 3 right now. The length of wave 1 placed at the wave 2 low gives a minimum wave 3 target of in the next 2 months, 3 months, pretty conservatively, we're going to see Amazon reach 3,917. That's the minimum wave 3 target. And I don't think that's actually going to be an accurate target. I think we're going to go a lot further than that for wave 3. But even if that's the minimum target and we have a shallow wave 4 correction, which pretty conservatively will retest the wave 1 high, then the length of wave 1 placed at the wave 4 low will take Amazon to 4,400. Right? So we've had 4,300, 4,400 as a larger degree destination for a while. And I think we have a smaller degree path how we're going to get there. Right now, we want to make sure that Amazon holds above 3,127. If it does, we're going to begin wave 3 of wave 3 very quickly, see Amazon in the 3,900s, potentially even the 4,400s towards the end of the year. So Amazon's looking very good. Procter & Gamble and Walmart, these charts are identical. I've made this joke before, but if this was a Rorschach test, I would fail. I can't tell the difference between Procter & Gamble and Walmart. This is a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction, large degree wave 2. The length of wave 1 placed at the wave 2 low gives a wave 3 destination for Procter & Gamble of 174. That could happen by the end of the year. And if we look on the smaller degree, it might be happening right now. We can see on the smaller degree, what did we do? We formed 1, 2, 3, 4, 5 waves. We completed a wave 1. We had another wave 2 correction. So the length of wave 1 placed at the wave 2 low gave a minimum wave 3 target of 147. Okay, the textbook wave 3 target on the very small degree, I should add, is 149. Now, why is it important that Procter & Gamble we'll get to 149. Well, that's going to mean it's above this wave 1 high from November. And for the past almost 8 months, 9 months and 10 months, institutions have been accumulating the crap out of Procter & Gamble, loading up shares, loading up options, getting ready to go on another leg higher. And if you look at Walmart, it's almost the exact same story where we're expecting some explosive upside for Walmart. And it might be happening right now. So this is the full count. For Walmart, it's a 1, 2, 3, 4, 5 large degree wave 1 and an ABC correction put in a large degree wave 2 the length of wave 1, place of the wave 2 low, just like Procter & Gamble going to 174, takes Walmart to around 178. Again, that could happen by the end of the year. I'm expecting these two to do very well in the fourth quarter. Even just to end this quarter, I'm expecting a pretty nice run up. But if we look on the smaller degree, Walmart and Procter & Gamble, they're giving a lot of evidence. We're going to break above this wave 1 high. We're going to confirm this was all institutional accumulation. Okay, these are, very important to the value side of the market and the consumer side of the market, that Walmart and Procter & Gamble, they've been being accumulated for the past 8 months, the past 10 months almost, by large institutions. Okay, so if we look at Walmart on the smaller degree, it looks something like this, where that's a wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. Wave 1, ABC correction, wave 2. So we held above this wave 2 low. We're within wave 3 right now. The textbook wave 3 target is the 161.8% extension of wave 1. That's going to take it above the all-time high of 153. It's going to confirm that since December 1st, large institutions have been scaring out retail, then wearing out retail while they accumulated the crap out of Walmart. So very great to see Walmart and Procter & Gamble doing very well. I want to talk about Bitcoin and Ethereum. Bitcoin and Ethereum doing very well. You have to know wave theory. You can't say it's voodoo, because classical traders, they whiffed on this one. I'll say it. The classical traders, they whiffed. They're going to call this, they're still going to call this probably a head and shoulders pattern. The head and shoulders pattern, honestly, is about as accurate as a coin flip. And I think a coin flip might do better than that. But anyway, this is the wave 1. Here's the ABC correction. Wave 2, the length of wave 1, place of the wave 2 low, is going to have the classical traders telling you to buy Bitcoin up here. Buy Bitcoin up here. Wait until Bitcoin's at an all-time high. It's going to 80,000. That's when you should buy Bitcoin. Okay? That's what classical traders think. I love classical traders, but you can't call this weakness, okay? That's the 61.8% retracement of a 5 waves impulse. That's the time to buy, okay? That's wave 1. That's wave 2. The length of wave 1, place of the wave 2 low, takes Bitcoin to 90,000. Then that's the conservative wave 3 target, is that Bitcoin will go to 90,000. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. That's going to take Bitcoin, assuming that wave 4 retests the wave 1 high, which I normally say is actually pretty conservative, then a wave 5 would take Bitcoin to 125,000. So I think bulls right now, they can move that stop up to 28K, 28.9K, and say if that holds, that's wave 2. This is wave 1, that's wave 2. We're within wave 3 right now. And it's about to get very entertaining for Bitcoin. When we get into that 90,000 range, we might have another opportunity if we do 1-2-1-2, but I wouldn't bet on it. I wouldn't plan on it. We might, the market gods, they might be nice. They might give retail another chance to buy Bitcoin. I don't think they will. I really don't think they will, but I know for sure if Bitcoin did pull back, the classical traders would call this a head and shoulders pattern. That's when you would know it's time to fly for Bitcoin. I don't think we're going to get this pullback. If we did, it'd be a huge buy, but I don't think Bitcoin's going to be that nice. I think Bitcoin's it's gone forever. Maybe it'll pull back, but I don't think this low of 28.9K is going to be broken. Hopefully, probably not in my lifetime. The length of wave 1, place of the wave 2 low, that's wave 2. And it's takeoff time for Bitcoin. We're going to 90,000, having a shallow wave 4 correction, and then a wave 5 higher, and then Ethereum. I mean, honestly, if you have FOMO about Ethereum, I don't blame you. I really don't. This is gorgeous right here. A wave 1, and then, come on. If you really say you don't believe in wave theory after Ethereum forms 4 wicks at the 61.8% retracement, that's just disgusting. Okay, that's just disgusting. Okay, this is the 61.8% retracement of a huge impulse, and you call this weakness. I think that's embarrassing. I really do. But that's the length of wave 1, place of the wave 2 low. That takes Bitcoin, that takes Ethereum to 6,000. While a shallow wave 4 correction will go on a wave 5 higher. I don't think they'll be this nice. But if this happened, it'd be a huge buy. I don't think they're going to be this nice. If we got a chance to buy Ethereum against this low of 17.09, it'd be an incredible opportunity. I don't think they'll be that nice. I think they're going to make the classical traders tell you to buy Ethereum when it's forming a huge cup and handle up at all-time highs. It might not even consolidate that long. The length of wave 1, place of the wave 2 low. Ethereum's going to 6,000, having a shallow wave 4 correction and going on a wave 5 higher. That wave 5 minimum target, assuming wave 4 retests the wave 1 high, that takes Ethereum, into the 8,000 range. So Ethereum looking extremely good. Bitcoin looking extremely good. I don't think either of them will break those wave 2 lows. I was looking for the first quarter and the second quarter, to be when Ethereum and Bitcoin reach those targets of 2022. Might happen quicker than that. Bitcoin and Ethereum, if you look at those charts and you still don't believe in wave theory, you're just not going to be able to do this. But here's Pfizer. I hope you believe in wave 3 for this one. 1, 2, 3, 4, 5. Large degree wave 1. And an ABC correction is where a wave 2 ends. Now notice the length of wave A, place of the wave B high, is exactly where wave C ended. Wow, that must be a huge coincidence. Okay, because the Dow Jones ETF DIA did that exact same thing. But anyway, here's a wave 1. The length of wave 1, place of the wave 2 low, gives a minimum wave 3 target for Pfizer for 62. Now we've broken above this December 2018 high. So what does that mean? That means that we have confirmed that we have been accumulating Pfizer as a market for the past 2.5 years. So this dividend aristocrat, this pharmaceutical giant, has been being accumulated by large institutions for the past 2.5 years, and we have proven that. We've known that. And if you looked at the bar chart straddle and strangle screener and you hypothetically bought calls on Pfizer every time it appeared, then I can tell you this is the date you bought calls on Pfizer, and this is the date when you bought calls on Pfizer. The bar chart straddle and strangle screener, called Pfizer perfectly. And now we're above this wave 1 high. We're looking very good for Pfizer on basically every time frame. What I've kind of done, I've taken the 161.8% extension of the high of the length of the wave 1 from 27 to 43.08. That gives kind of a textbook target of 52.47 for Pfizer. That's kind of the next place where bulls are going to be looking for some sideways action. I wouldn't sell Pfizer shares until hell froze. For me personally, a dividend aristocrat that I got in the mid 30s. I'm not ever going to sell that. But anyway, here is wave 1 on the larger degree. And we put in a large degree wave 2. So what's it going to mean when Pfizer gets to 52? Well, that's going to mean that we've accumulated Pfizer as a market for the past 2 decades. This stock's been being bought for the past 20 years, and we can probably see why. This is a monster base breakout. It's heading to the median of this pitchfork. It's probably not stopping there, but Pfizer looking extremely good. Once it's above this all-time high, we're going to know what we kind of already suspect. This stock has been being accumulated for the past 2 decades, definitely the past 2.5 years, breaking above that 2018 high already. Here's gold, GLD. Gold's not very popular right now. Neither was Bitcoin a couple months ago. But here is GLD. This is the most unpopular sector right now. We've seen some pretty unpopular sectors do very well. The growth stocks were very unpopular in the second quarter. In the fourth quarter of 2020, the value stocks, we call those the boomer stocks, right? Before they exploded in the first quarter. Now we're making fun of gold bugs. This is wave 1. This is a WXY correction. All that means is that this is a 3 waves pullback connected by a 3 waves connector X. So the length of wave W, place of the wave X high is exactly where wave Y ended. It's basically the exact same thing as an ABC correction. Normally, I would have just labeled this as an ABC, but this is a WXY correction. Really, the only practical difference is that a WXY almost has to end at the length of wave W, place of the wave X high. I think that is where the WXY ended at exactly the 61.8% retracement. So if gold's above 157 in the short term, then that's the wave 2 low we don't want to see broken. If it doesn't, the length of wave 1, place at the wave 2 low, will take GLD to 215. I still have always talked about gold and silver as long-term plays, but we're going to start seeing some action in gold and silver, especially as we see that quad witching date come around. We're going to see, most likely, in my opinion, that large institutions have been accumulating gold and silver for a very long time. First Majestic Silver, AG. I mean, this is a ton of evidence of what we kind of already expect. Keep in mind, this April 2011 high, it's already been broken by spot gold. It's already been broken by Wheaton Precious Metals. I believe this is a wave 1 and wave 2 for First Majestic Silver AG. This is another wave 1 and another wave 2. That's another wave 1 and another wave 2. We've broken over every single one of these wave 1 highs. I think right now, this is a 1, 2, 1, 2, 1, 2. Nest, and it's going to go to the median of this pitchfork. Monster accumulation, monster base breakout. It's just like Pfizer. Don't we know all the fundamentals already? Yes, we do, and that's why they're loading up the crap out of gold and silver right now.